انا اعرف والله مازن حرك، شوف الناس من جي ترى. كيف امورك؟ صحتك؟ ايه بعرف، ايه غصبا عني.
Welcome to our second presentation. We will be talking about green financing. We have Tariq Arawas that will be presenting for this session. Please keep your questions till the end, and he will be happy to answer all of your questions. Thank you.
Hello, can you hear me? Okay. First of all, thank you for sitting and taking part of your precious time. Before I start about green financing and going into the depths of it, it's very fitting here today. You can see that Oman Sustainability Week, the amount of people, the amount of booths that we have, that the sustainability and the energy transition that we're having is something in the future. And we're working from now in order to achieve it. But there is one aspect that you need to be very, very careful of is financing itself. So before I go to the technical, what is the definition of green financing? There might be part of the audience here are not maybe familiar with financing. So basically, financing is raising capital to fund your operations and your product and your projects, and that is repaid at a particular point of time. The main objective of financing is to create growth for investments, development, and ultimately creating value, whether the value is monetary value or it's a strategic value. And this is why we're here today in the Sustainability Week, is to make sure that creating value monetarily and strategically goes hand by hand. Ultimately, when you go into green financing, it's the same typical financing that is mentioned in the above. However, there are very clear characteristics, matrix that has to be met, which is basically any financing, whether it's coming from an international debt capital market or coming from private equity, private credits from the banks, it must be particular for a green project. The environmental impact must be measurable, and the proceeds that you receive from the funds must go to the projects. So what is the characteristics and matrix of financing? Let's start with the instruments. Basically, as I mentioned, you are able to raise the funds from a green financing perspective from a bond or a sukuk, or from a loan from private banks. They are all structured under the same regulation. Some of them are developed from the International Capital Market Association. Some of them are developed by the World Bank in order to ensure standardization when providing such instruments. You might say, what's the benefits of green financing and why you should take it? Not only from a green energy transition perspective, but also you will be able to tap into funds that are not normally there in a normal conventional financing. Basically, they are ESG investors, they are hedge funds, associations, asset management funds that have a clear mandate to invest in ESG projects. And these ESG projects have particular funds. So you're able to tap into normal conventional and at the same time tap into a new different pool of investors. Also, it provides the strengths, transparency, and governance, which is key and crucial for any ESG project, that you need to have clear and governance going into the future. But ultimately, the best reaping reward of this benefit is the pricing. Because the pricing, there's something called in the international treasury terms, greenium. Even if you Google it or ChatGPT, you're not going to find it, but this is a market saying, which is basically provides you a cheaper rate when you normally go to a traditional conventional loan. Why is that important? It's because, as I mentioned before, anything you do needs to create value. And by having a cheaper financing, that will make your ESG project more economically viable. And that's extremely important because it provides you sustainability, provides you growth, and ultimately provides you economic viability. However, there are some key restrictions that you have to adhere to in any green financing. It's your obligations. There are strictly eligible and reporting requirements. In addition to your normal banking loans, you also are required to provide more additional reporting to these investors, to these banks, as in to ensure that all of them is adhering to the three main principles of green financing, which is it's for environmental projects, environmental impact must be measurable, and use of procedures clearly defined. So investors who are investing in your project or banks who are providing your credits is required to have external review and monitoring review on these reporting. The responsibilities. There should be a clear definition between credible green financing and greenwashing. When you take these type of financings, you need to ensure that these financing goes to your ultimate aim, which is energy transition or sustainability projects. You don't want to be in a position that you, as a company, lose your credibility when they figure out at the end that these funds were not associated to the certain criteria that they were provided to you. And it also affects the reputation of the organization internationally. And I think when I said internationally, it's a good segue to see the map of the world. You can see the upward trends of green financing. Before 2020, the green financing was very in a handful of regions, mostly in Europe. But after 2020, when COP came, when net carbon zero came, when the world governments, elites came together and said, we need to make a change, then change happened. And you can see in Europe, after 2020, there has been an increase of 700% of green financing issuance than before. The same percentages occurred in Asian markets. And as you can see in the rest of the world, is not that much. So it begs you to differ and question yourself, why? Why is Asia and Europe the most concentrating on green projects other than the rest of the world? So you need to think about it in two aspects. The first aspect is basically energy diversification. So when you provide energy diversification, especially in the Asia markets, they want to diversify from normal fossil fuels and sustainability. So they have to have a mixture of both in order to provide sustainability for the future and ensuring that the current operations of the businesses today that is affecting our day-to-day lives still continue. until that transition occurs. Also, you have a second part, which is basically Europe, which is providing the energy transition projects, whether it's the green projects that are provided at their time, or solar projects, or wind projects. So we live in a diversified, globalized world, and everything ticks to another. Yesterday was Europe, today it's Asia, today it's Oman. Oman issued its first green financing by OETC internationally in October 2025, for a 5-year 750. It was the first ever international market capital that was provided in Oman. So tomorrow, you're going to see more countries adhering to this in order to reach to the agenda. Coming into the end, as I mentioned at the beginning of my presentation, I mentioned that financing is also part of this globalization direction that we're going to. But financing goes hand to hand to whatever the agenda the people as us are going to be. Because financing is not a new thing. Financing started in the 1600s when they used to fund governments. And then it transitions into the 1800s when the Industrial Revolution came by and provided corporate bonds, and banking started to show up. And then you can see in the 1950s, more of a different niche of project financing occurred. And it was very specific for oil and gas industries. Why? Is because in the 1950s, the Middle East saw its boom in the oil industry. And to provide security for these projects, a different instrument has been developed. The same goes for Islamic financing. The same goes then to fintech. Green financing started in 2010. So it's something that was there before, but it was not mainstream. The same then goes to Bitcoin and cryptocurrency. What I'm trying to say here to conclude my presentation today is that when there is a principle and when there's a direction of people and a change to occur, capital markets, economics, always go hand in hand by it. At the end of the day, capital markets are agile and dynamic to ensure that national, worldwide, and corporate agendas are met. Thank you for listening to my presentation. I'm able to take any questions if you have.
Thank you, Tariq. Very insightful. My question is, do we have a Sharia-compliant green financing?
Yes, there is. And OETC took it the first time. It's Green Sukuk. So there are Islamic Sharia-compliant instruments for green financing. Ultimately, as I mentioned, it has to go to the specific environmental project that is environmentally measurable.
But you can choose if it's Sharia or non-Sharia compliant.
Yes,
okay,
you can.
Excellent. Thank you.
Thank you, Tariq, for your presentation. I wanted to ask, when is the right time to get into this market? OQ has a number of sustainability investments and initiatives, but we haven't yet ventured into this space. So what are the criteria or the things that companies need to take into consideration before getting into green financing?
Sure. Very, very good question. Because, and a very good point also, because there are some misconceptions between sustainability and green financing and how it's linked. Green financing has to start from a greenfield project. It has to be backed by a greenfield energy transition project from A to Z. There are sustainability financing, which is reducing emissions in your current consumption that you're doing, improving your sustainability of itself. So there is a link. As for the right time for OQ to enter is when we have from an A to Z a greenfield alternative project in Oman that provides commercially and viability sense in order to improve it, then that is the right time to enter. I think that's all. I really, really appreciate your time today and sit along my presentation. And I wish you all the best for this week. And good luck in the future. Thank you.